Markets are bleeding and it looks like we are taking our medicine as prescribed by President Trump. Bitter, but necessary if you were to go by what he said. Well, let's start with where we are now as compared to the lows we saw on the 3rd of March. Nifty actually broke below the March lows intraday. It ended above it. The Nifty Bank is just about 5% away. Mid-caps are about 5%. The small-cap index is about 6% away as far as revisiting those March lows are concerned. Let's zoom out a little bit and ask how far we have fallen from the highs. Nifty remains about 15.5% off the highs. Nifty Bank is about 8% off. Mid-caps are down 20. The small-cap index is down a sharp 23%. Just a quick look at today's swoon and the biggest movers today. I mean, the losses include lots of Tata Group names. Trent, Vocard, Cartrade, First Cry, Blue Jet, Time Technoplast. I mean, these were some of the biggest volume-led losses that you had. And, a lot of retail and institutional interest here in many of these names. On the upside, we had some green in stocks like Delivery, which has actually been a huge underperformer since listing. GMR Airports and a wealth manager like 361 were also high, but very selective buying in an otherwise completely risk-off red tape. This pain isn't just local. Actually, the pain is coming from global markets and US markets specifically. Now, if you remember our conversation with Gavakal's Louis Gavakal just about 1 month ago, he'd said that Trump had basically three aims: lower borrowing cost, lower the dollar, and lower oil prices as well. Well, it looks like they've had some success with these three aims. Since Trump took office, I looked at change from the 20th of Jan when he actually swore into his second term. The US 10-year yield is down 63 basis points, dollar index is down 6%, and oil prices have slipped about 18% as well. Well, markets should be happy, right? Well, obviously not. And the reason is the way all these three things have been achieved. The bigger than expected tariffs have crashed US markets, equity markets that is. So S&P is down about 15% since Trump took over, while the Nasdaq is down 20% from the 20th of January. Markets, of course, are pricing in the huge amount of uncertainty out there now. The big question, of course, remains this: will Trump offer, an off-ramp to key trading partners, or are we headed into a full-blown trade reset? We don't know this, and I think this is the single most important question which will determine whether we pull back from the brink or we go full steam ahead. Markets are now hypersensitive, will remain hypersensitive to any headline which signals de-escalation, and a single headline can swing sentiment. Back home, of course, all eyes now turn to the RBI policy on Wednesday, both in terms of what they do and the commentary will be equally important. Will the central bank provide confidence to the Indian economy as we continue to navigate these very turbulent times?
Well, thanks so much for tuning in to CNBC TV18. Make sure you follow us and stay updated on all our social media platforms.